With 2020 almost in the rearview mirror, something most people are very thankful for, the 2021 agenda for boards of directors, and specifically for audit committees, is shaping up much differently than in years past. This is Kevin Donahue, Senior Director with Protiviti, welcoming you to a new edition of Powerful Insights. Every December, Protiviti publishes a look at the Audit Committee agenda for the coming year. The list typically includes enterprise, process, and technology issues, financial reporting issues, and this year, diversity and social justice considerations. In this podcast, Protiviti Managing Directors Brian Christensen, Chris Wright, and Jim DeLoach join me to discuss the Audit Committee agenda items for 2021, with the COVID-19 global pandemic continuing to be on everyone's minds. Brian is Executive Vice President, Global Internal Audit for Protiviti. Chris is the global leader of our firm's Business Performance Improvement practice, and Jim leads Protiviti's Global Thought Leadership program and is a member of the firm's Solutions Leadership team. Brian, let me ask the first question of you regarding the first item on the Audit Committee agenda in our issue of the bulletin. Consider shifts in the risk landscape to establish an appropriate business context. There have been a lot of shifts this year, clearly. What does this issue mean to you? What are some of these shifts that have occurred?
Kevin, this has been a monumental year. I think many of us can't recall anything like it in our recent history or past. And clearly, the risks that boards and management are dealing with are very different than what we've seen in recent years. Obviously, the recurring risks of cybersecurity, fraud, and things of that nature remain paramount. But when we look at an organization and what the risks are to the business, resiliency really stands out. Historically, this is one maybe that has been taken for granted, but we're seeing this more and more in discussions today.
And Jim, what are your thoughts on this first issue? I know you've written quite a bit about some of the shifts that have been taking place this year.
Well, I agree completely with what Brian said. I think there's been an enormous impact from COVID-19 and the related economic recessionary pressures on business, then the emerging social issues that have created additional complications. All of this is certainly, when you look at the full landscape and the changes that it makes on the business, it gives the audit committee a context by which they can enhance the effectiveness of their oversight. I might also add that Protiviti, in partnership with North Carolina State University ERM Initiative, we kicked off our survey on the top risks, top global risk, and I encourage our listeners to participate in that.
Yes, Jim. I'll add, we want all listeners to participate. You can find information on that study on our website, protiviti.com, and we're excited to be publishing those results after we complete the survey in early February. Chris, let me ask you about another item on our audit committee agenda, which is work with the CFO to review the finance function's resiliency. Brian just mentioned resiliency here. What has been the focus of CFOs this year around this topic of resiliency, and how has that changed maybe from years past?
Well, Kevin, what the CFO community did this year, and we found this in surveys directly of CFOs, in addition to some of the work we've done on this report, is really learned a lot about how resilient they were versus how resilient they thought they were, and their organizations. So an audit committee working with a CFO would want to understand: are the systems configured to allow the group to operate remotely? Are there people able to operate remotely? And just as importantly, are there third-party service providers that you can outsource activities, but you can't outsource accountability? Service providers able to work remotely and provide all the data, which is to get the numbers out. But then, if you think about this through an audit committee prism, to do so without violating or diminishing any of the internal control framework. On top of that, where the resilience of CFO organizations was tested in many ways, as they were asked to forecast more information and to do it more frequently and then respond to the evolving needs of all their internal customers for data. And so what we found is that the CFO community was focused in roughly the same measure on most things. And perhaps that's why they were able to function as well as they did this year, because they were thinking about it last year and the year before.
That's a great rundown. Thanks, Chris. I also wanted to ask you about what is the third item we have on the audit committee agenda for the coming year. Ensuring the CFO is a strategic partner with cybersecurity, privacy, and related priorities. We've talked about this quite a bit, and I want to hear your insights again, because this is a topic that comes up regularly in our other studies looking at CFOs and the finance function.
Well, sure, Kevin. Obviously the CFO is not necessarily responsible for creating the cybersecurity, privacy, or other IT environments, but quite often a CIO may operationally report to her. Quite often they are responsible for providing the funding and the budgeting and understanding the key elements of infrastructure to enable that, so that they're able to provide for it. And then, of course, they are absolutely concerned as it relates to financial information. So what's happened is the CFO has earned a seat at the table in strategic discussions and understands the needs of the organization, and is looked to as a partner of the IT organization, as a customer of the IT organization, but then also as the source of funding, the person with the ability to make sure that the budget is there and that the funds are there when the budget is called upon.
And Chris, a quick follow-up to that. I know we've talked before about questions, requests the CFO may be getting around placing a dollar amount on potential security risks, potential loss. Is that dialogue continuing to grow between the CFO and the board?
Kevin, it is, particularly in organizations that are engaged in enterprise risk management discussions and analyses. It is a constant. It is also required for public companies to disclose risks if they exist in a way that can be quantified. So there are absolute requirements, but then there's the ordinary dialogue. Of course, also in many organizations that don't have a risk committee, the audit committee can be the default, if you will, the de facto risk committee. And so you can expect those discussions to occur in a room where the CFO is present.
Thanks, Chris. Brian, back to you. Our next agenda item is work with the CAE to formulate appropriate imperatives for internal audit to ensure the function's continued relevance. Now, similar to what I was just talking about with Chris, we've talked about this before. It's been a focus of our numerous audit studies. It is such a high priority. What does this one mean to you?
Kevin, this is really a game changer. When I talk with the audit executives and their stakeholders, really what's being asked of them is to demonstrate that they can be agile, flexible, and responsive, right? We've talked here in this conversation about resiliency, and Jim mentioned, the social unrest and what that has caused. We've talked about the pandemic. I think we can talk about political, uncertainties. All these create an environment where the risk profile changes. And I think chief audit executives, as you mentioned, we've talked about in our past surveys in recent months, that can demonstrate that they deserve a seat at the table. They need to demonstrate that they're relevant. And the things that they need to bring forward are fresh ideas around cost containment, dealing with the new remote work environments. And one recently we're talking about is the wellness of employees. These are all manifestations of the current environment and maybe areas that historically chief audit executives have not looked at. But their stakeholders, whether it's management or audit committees, are wanting updates and making sure that we're hearing from the audit executives from their point of view.
Thanks, Brian. And I wanted to jump to our next topic and have you speak a bit to that as well. One of the audit committee agenda items we are recommending is evaluating the pandemic's near-term and longer-term impacts on the internal control environment. What are your thoughts on that, considering the many, many changes that have happened this year in organizations and the impact those changes have had on this internal control environment?
Yeah, Kevin, there's really kind of several stages that we looked at, right? The immediacy of the adaptation of working from remotely, working from home, as organizations tilted up their systems and technologies to make that happen, may have introduced opportunities for bad players to get into those networks. And so that was something I think people started looking at. But as we're looking more long term, we're seeing of what are the impacts of this? Is this the new norm as we go forward? I think people and other conversations are saying that this work from remote location may be more the norm than what we've seen historically. And so that brings in all kinds of new paradigms, whether it takes into consideration real estate, productivity and efficiency of employees. What are we doing around the wellness of employees, right? We all can agree here, we're talking remotely, but it's all much better to be in the same room having that conversation, but that may not be the case. And so all of these have implications. And so I think the near term is what does it mean to get these environments set up? But the long term is what does that mean to the technology, methodology, implications to the workforce? And these are things that need to be contemplated as we look to the coming year.
Thanks, Brian. Hey, Jim, I wanted to see if you had some additional thoughts on this one, particularly from the dialogue at the board level that's been occurring. What are there other topics, questions they are or should be probing around the internal control environment, whether it involves a CAE, CFO, or other C-suite leaders?
Kevin, I had the opportunity to listen to a National Association of Corporate Directors national event earlier today. And there were a number of active directors on that program, and they were talking about internal controls, particularly the impact of the pandemic and the need for companies to downsize, right size, what have you. In addition, they also were referring to the control environment over ESG disclosures and how that might fall under the purview of the audit committee in the event that those disclosures are relevant to financial reporting. So I thought that was an interesting point. But clearly, the control environment is on the mind of directors.
Oh, that's great. Thanks, Jim. So, Chris, let me have you talk a little bit about our next agenda item, addressing accounting and reporting implications of operational adjustments during the pandemic and recession. So again, CFOs and the finance organizations have had to pivot quite a bit over the last 11 months here. And we again studied this in our own finance survey. What are your views on this and how effective CFOs and finance organizations are doing in this regard around addressing these implications?
Kevin, I think the focus of CFOs and other financial reporting professionals in past years on understanding their infrastructure and the technology that is available to them allowed them to operate in a pretty nimble way remotely. But it didn't make the work any easier. Anytime you change the way you do business, and certainly the pandemic changed the way a lot of companies did business, you're going to have an accounting outcome. So picture the clothing company that switched to making face masks, the plastics company that switched to making face shields from whatever else they were making, companies that had to reroute distribution, stand up shared service centers in different locations because other locations were unable to perform. All of those operational changes result in the need to revisit the accounting for whatever arrangements are made, whether they're contractual, informal, or just require more interesting and detail level tracking, or just different tracking because the systems were set up to track one set of information, and now you have to create an outside system or an offline system to track information moving in different directions as products flowed in different directions. If you shift the locus of your operations from one country to another, there were income tax implications that needed to be considered. So finance organizations did a pretty good job and continue to do that of monitoring those changes, and we've seen that as quarterly and annual reports have been filed. They may have availed themselves of an extra day or two. They spent extensive time with their auditors and their audit committees to make sure they got it right. But the focus has had to be on, if you shift the business, understanding that everything you do differently may result in a different accounting outcome, and that they've manage to create and erect the systems and then operate them to track that information.
And Chris, our next agenda item, I think, is related to this, assessing COVID-19 related impacts on financial reporting assertions. Why is this so important for the board and the audit committee to keep an eye on?
Well, so in addition, Kevin, to the accounting outcome of changes in your operations, changes in your results can have a pretty dramatic effect on fair value in particular. The financial services community saw the market change radically, nearly daily, from March until today. As a result, they had to look into whether or not the valuations of their investments were impaired or improved, and both of those things probably happened along the way. And then you think about companies that have balance sheets that have grown through acquisition or have developed extensive intellectual property. They've had to consider the assertion of valuation, and in very extreme conditions, companies that were experiencing financial distress needed to consider how to classify themselves as either a going concern or a company for whom going concern might be in substantial doubt. And so in this instance, we're largely affected by economic factors, whereas the accounting implications in your earlier question were largely driven by operational factors.
And Chris, a quick follow-up on this. With these various implications and understanding the assertions going on, how important is it for the CFO to have, a strong channel of communication and dialogue with the audit committee on these matters?
Oh, it's extremely important. At the end of the day, the financials have to be issued timely and correctly. And it is likely that when there is a lot of change, that there is a need for an increasing depth and frequency of discussions between the CFO and the audit committee, and between the CFO, the audit committee, and the external auditors, who will either be opining on or reviewing those financials, depending on whether they're quarterly or annual. And so it upped the ante for that kind of discussion. And certain industries were affected more than others. I think audit committees and CFOs figured that out pretty quickly too, because of the common areas of accounting concern, as well as some guidance issued by the Securities and Exchange Commission for public companies that was certainly instructive for companies that were private and public around the assertions that needed to be watched. So there were a lot of sources of input on what to keep an eye out for. And it was then on the onus was on the CFOs, the CAEs, who are often the go-between between CFOs and audit committees, and then the audit committees themselves.
Great. Our last agenda item here for the audit committee is consider the nature of critical audit matters raised by the independent auditor. This is, I know, fast become a major issue, something that we covered in a recent flash report titled PCAOB Issues Interim Analysis Report on Initial Impact of CAM Requirements. That is available on our website. So Jim and Chris, I wanted to have you both respond to this. Jim, I'll have you respond first. Considering critical audit matters, why is that important for the audit committee to really have clear visibility about and understand how those are being addressed?
Kevin, over the last year, auditors of large accelerated filers have reported on critical audit matters, and this year, beginning this calendar year and beyond, all other public companies, auditors of those companies will be reporting on critical audit matters. And from an audit committee perspective, when an auditor articulates a critical audit matter, what the auditor is saying, this is a material account or disclosure that presents especially challenging, subjective issues and require complex auditor judgment. So if I'm on an audit committee, the first thing I want to know is why. So that means I want to discuss these matters both with the auditor and with management. And once I understand the issues, I should make sure and satisfy myself that the disclosures are clear. And in addition, if there are any issues presented by these critical audit matters that management and the auditor don't agree on, either because management's applying aggressive accounting principles, or there may be opportunities for a lot of running room in choosing where a reserve should be, that kind of thing. I think that's an opportunity for the committee to turn to management and determine whether or not there's potential opportunity to streamline and improve the accounting and reporting process.
Jim framed it very well. You know, the PCAOB is the regulator of auditors, not of public companies. But when you understand the relationship, they essentially become an indirect regulator of public companies. And so what interests the auditor, certainly interests them enough to list a critical audit matter, should interest the CFO and the audit committee and the chair of the audit committee. Interestingly enough, and we've tracked the critical audit matters since they came out. You know, the top four issues in order: goodwill, revenue recognition, contingencies, and largely those around M&A, and income taxes, were wholly appropriate as the top four when you consider what we just discussed around pandemic-related financial reporting outcomes. If you change your operations, revenue recognition strategies and approaches may have shifted. As companies flush with cash and those less flush with cash got together, there was a lot of M&A activity during the course of this year, as well as the evidence of M&A activity sitting on balance sheets in the form of goodwill, where valuations needed to be considered. And if you shifted the locus of operations from one country to another, and you're a global entity, the propriety or the advisability of having a critical audit matter around your income tax strategy seemed wholly appropriate. And so those CAMs were disclosed throughout a year leading up to the current situation, but in hindsight, they proved to be wholly appropriate and on point, and thus, you know, give some credence to the fact that the discussions between auditors, audit committees, and CFOs on those topics were timely and appropriate.
Well, Brian, Chris, Jim, this has been a great discussion. Thank you for joining. One final question. We've gone into quite a bit of detail covering these 8 areas on the audit committee agenda. Are there other matters that the board and audit committee should consider as well?
You know, I think that one thing that we chose not to include on the agenda, but I do think it's worthy of mention, is the fact that we can all observe things happening in the marketplace that are creating headwinds for fossil fuels and for business models and activities that drive greenhouse gas emissions. And those headwinds just seem to be continuing to pick up momentum as you look at what's happening in the marketplace. And I think the point, Chris, to make here is relate to ESG. And sooner or later, the implications of material climate risk are hitting the financial statements, and we know it's happening already. And while ESG is ultimately a full board responsibility for most companies, each board committee has a role to play, and for sure, the audit committee should review the completeness and accuracy of ESG-related SEC disclosures.
I agree, Jim, and Kevin, thank you for asking that question. A couple of things come to mind when you think about ESG disclosures. One, they're not presently required in the U.S. They are increasingly being required outside the U.S. The human capital disclosures that are impending that the SEC will be requiring are a step in that direction. And then, of course, if a company chooses, because of market and stakeholder reactions, to make ESG disclosures, as Jim suggested, they need to be accurate. They need to be based on a referenceable standard. And from an audit committee perspective, if you're a public company and you make these disclosures in your periodic filings, and then you seek to raise capital in a form from the 1933 Act, it might be incorporated by reference, and an underwriter may be asking you for auditor comfort on those disclosures. And so while it may not look like financial information, it will take on very much the same character as financial information and require some level of attestation or other kinds of work that allow third parties and other stakeholders to feel comfortable that they're accurate. And so it will at some point, if it hasn't already, arrive on the doorstep of the audit committee to ensure that disclosures, whether they're required, such as the human capital disclosures, which will be required, or they are voluntary because of market forces, that they are accurate, referenceable, and able to withstand some level of audit scrutiny.
I want to thank Brian, Chris, and Jim for joining me to share their thoughts on these agenda items for audit committees in 2021. You can read more about these issues in our latest edition of our newsletter, The Bulletin, titled Setting the 2021 Audit Committee Agenda, which is available at protiviti.com/bulletin. Finally, I encourage you to subscribe to our Powerful Insights podcast series and to submit a review. You can find us wherever you consume your podcast content.